S&P 500, the NASDAQ 100, the Russell 2000, and the dollar. In today's video, we're going to be talking about all of those things and more. But first, we need to talk about what is causing this massive rip to the upside. We called it yesterday. We were saying that we needed to hold certain levels for an explosive move to the upside, and today would be the day for that. And that's exactly what ended up happening. So in today's video, we're going to touch on everything and hopefully put everything together. All right. So without further ado, let's get started with the video. First and foremost, we have to talk about one of the most important reasons why the market skyrocketed today. So US stocks advance as debt ceiling concerns ease. Okay. So basically, President Joe Biden on Wednesday said he was confident about reaching a budget agreement with Congress to avoid a default on US debt and left the door open to meeting a central Republican demand of adding work requirements. So basically, Treasury Secretary Yellen warned that the U.S. could default on debt as early as next month, with the issue prompting Biden to cut short his forthcoming overseas trip. So basically, the U.S. can default on debt early next month. The odds of that happening is very, very low. And essentially, if we increase the debt ceiling, that means that companies are going to be able to garner and get more debt, basically, right? So if the US were to default on its debt, then the entire stock market, everything would collapse. Like, things would get hit very, very dramatically. And the odds of that happening is very, very slim. So it would be very shocking to not see a deal being made before sometime early next month. And another thing is that, for example, Michael Burry predicted the 08 financial crisis, the 08-07 financial crisis, the housing market crash, right? In Q1 of this year, he bought over 8 different banking stocks. So he bought those stocks, I'm assuming, because he knew that there was a debt problem going on in the country, and they needed to get a resolution to that debt during Q2. So he bought it in the last quarter. I'm assuming because he has an understanding that there's going to be some sort of a deal being made. All right. And because that deal has good ramifications, that's a big reason why the market ended up skyrocketing today. And before we continue on with the video, please, if you guys enjoy the content that I'm creating, please make sure to subscribe to the channel. If you are subscribed already, please make sure to put on your bell notifications. Every subscription goes a long way. There are a lot of people that are watching the channel that aren't subscribed. So please make sure to subscribe. It really, really, really helps the channel. And aside from that, also, please like the video as well if you guys enjoy it. All right, let's continue on. So first and foremost, 3 things happened. AMD made another leg up. The SPY had a very, very bullish day, which I said would happen. And the NASDAQ ended up breaking above 330 and breaking above its rising wedge. So let's take turns looking at everything now. First of all, AMD. All right. So very similar to the situation back in March, where I said the setup is leading to a move upwards. We got it, right? So now it's just a matter of how much further we can go up. So if we look back in March, from the lows to the most high, we got about a 30% move in 10 days. Okay. And now if we look at it similar to what the move that we just got, we got about a 28% move in about 13 days. So my point of showing this is that these moves, in my opinion, should not be sustainable. And now is definitely not the time to start going long on the chips. So now is not the time to start going long on AMD. When things look extremely, extremely bullish, that's generally one of the worst times to go long or to be bullish on a stock. So right now, clearly things look on paper, wow, we're breaking out super, super bullish. Oh my goodness, we could just continue flying to 110 on AMD. Things look really, really good. Now is not the time to start going long. Okay, so what we want to see now, for if you're a bull, what you want to see for a continued move up is this needs to hold above prior levels of resistance, at least in this zone here. So it needs to hold at least $100 and create some sort of consolidation above this level. A move like this is just purely not sustainable. And now is just, once again, it's not the time to go long. Similar to back in March when we broke out of this consolidation period after a huge 20-something% move, right? Very, very similar. We had a huge 20-something% move, had a consolidation period, and made another leg up. Very similar. We had a consolidation period back here in March, and then made another leg up. Everybody that went long over here on March 23rd, they got wrecked. So this could be a repeat for May 17th for today. So today into tomorrow, if tomorrow we end up gapping up again, then I'm probably just going to enter short. But this is not a bullish setup. Like, it's not an opportunity to go long. It's a bullish setup, but it's just not a smart risk reward opportunity to go long. What you would rather do is wait for a retest to levels of support and go long there and see if the momentum can continue. I really hope we get a bullish. I hope we gap up tomorrow. I hope AMD gaps up and we gap up to like 105, 105.50. That would be such an easy short in my opinion, because things would just be very, very overextended to the upside, that a move like that is just not sustainable. So now the question is, is shorting it going to garner a good enough result, or should you just wait for a pullback and go long? That's the $1 million question. And for now, all we know for a fact is that I just would not want to go long here. All right. So we caught the short down here. We shorted it when it gapped up there, when it showed the strength here on the 10th, right? When AMD was at 97. And then we shorted it down to 94 to 95. I was saying 94 to 95 would be the target to the downside. We ended up breaking below 94 to 93.80. So that worked out. But then I didn't re-enter long. I didn't re-enter into any shorts. And then we ended up skyrocketing above $100. So now, does it make sense to go short again? So the question, so does it make sense to go short again or just wait for a pullback for a continued move up? It's not going to be easy. It's not going to be easy to go long after a huge 30% move in 2 weeks. Okay, so just keep that in mind. If we gap up tomorrow, definitely going short. I would love to go short. So Nvidia also skyrocketing. Nvidia and AMD are doing takes two to tango, right? So Nvidia is doing well, AMD is doing well. Very simple, not too much to look at. Okay. Now, when taking a look at the NASDAQ, this broke out to the upside on a rising wedge pattern. The last time this happened, I think if you guys were watching the markets during 2020 and 2021, there was a rising wedge on the SPY and the markets in general. And we ended up breaking above the rising wedge back then. And that was caused primarily due to the Fed pumping money into the markets with quantitative easing. So any sort of bearish setup just didn't work because everything was bought up and pushed up. So this move, a lot of it was primarily caused by the positive news coming out with the debt ceiling. But today was the day. I was saying that today was going to be a day where there was going to be a very explosive move. As long as 410.50 held on the SPY, we would break up. And today would be an explosive move. And that's exactly what I said. That's exactly what ended up happening. So now what are the next steps? So we're technically not overextended to the upside on the NASDAQ in terms of the Bollinger Band. But what we need to see is two closes above this resistance level. So we basically just need to hold 328 for two closes in a day, and then that would confirm a continued bullish move. But once again, it's just not a very good sign that AMD and Nvidia are getting very overextended to the upside. And when the biggest winners are very overextended to the upside, the move generally doesn't sustain itself. So we need to continue seeing how the largest winners are doing before we have a completely bearish bias or bullish bias. I was saying today would be so easy to day trade because whatever direction the market is showing, I literally said if the market opens above 412, regardless. So it really, really worked out today. So now we just basically need to see if the NASDAQ can hold 328 for a retest to the upside and continue moving up. But as it gets this high, it's not, once again, it's not a great opportunity really to go long. You would rather go long at support, tight stop losses for continued move. So tomorrow, a lot of it is going to be dependent on if we can hold support. I'm assuming that heading into tomorrow morning, market makers are going to try to hold support and try to lift it up. We'll see how that plays out, but I'm pretty convinced that we won't gap up tomorrow. If we do, that would actually be a bit bearish in my opinion if we gap up, because then it would just be a melt up, and I don't know if the market can really sustain a melt up. But so far, you know, I think there needs to now be some sort of consolidation, some sort of easing out, but we'll see how that turns out. But let's take a look at the SPY. So the SPY is giving a bit of a better picture because we broke out of this downtrend. So I was showing how the downtrend, if we did not hold, guys, this is really like important to understand, because when you're looking at a stock and a setup, especially the S&P 500, when you're looking at something like this and it looks extremely devastatingly bearish, it usually does not lead that way. Okay, so yesterday I was explaining how if we did not hold 410, 409, if we broke below those levels, the market would just capitulate down. Very clearly I was saying that. And I was saying that if we held, so first of all, I was saying that yesterday I was saying today would be a very explosive move. If we broke below 409 or 410, we would capitulate to the downside. And if we held that level, we would have a very big move to the upside. And that's exactly what ended up happening, primarily because we were failing at this downtrend level multiple times. And today would be a very important day in terms of price action, that if we did not break up, basically it needed to make a move today. Because with this candle, basically this candle right here from Tuesday, right? Clearly very, very bearish candle. Very bearish candle. We held 410, right? I was saying that if we did not hold 410 heading into today, it would be over, because this was a very, very bearish setup. Many people went short alongside this trend line. They saw the clear weakness in the downtrend. But once again, when things look extremely bearish like this, it is generally a very big opportunity to be a trap. Okay, so worked out to the upside. So now moving forward now on the SPY. Obviously, the next upward target is going to be the 417, 418 level. But again, it's not the best opportunity to go long. Once again, you would rather wait for a retest to 411, 412 for another move to the upside. You don't want to go long in extreme strength like this. Although it is very good news that the debt ceiling, everything is starting to get resolved, but you don't want to start going long on breakouts, especially when like we just broke on a downtrend, especially when the large tech stocks are starting to get a bit overextended to the upside, and especially when there's a lot of uncertainty still. Okay, so there's two main reasons why the market is showing some strength right now. Number one is because Powell, they said that they're going to pause rate hikes for June. Number two, the debt ceiling news is starting to get close to a resolution. If any of those things don't follow through, the market is going to take a huge hit. But for now, moving forward, very simply, I really don't think if we get a gap up tomorrow on the market, like a substantial gap up, if the SPY ends up hitting 416.50 tomorrow, that might be pretty bearish. I don't think that's going to be a bullish setup. And similar to the NASDAQ, you know, we don't want to see these big winners continuing to show strength. Similar to AMD, if AMD gets a gap up, that is not going to be something sustainable in my opinion. Also, obviously, NVIDIA. Okay, so you could see that they're starting to get a bit outside of their upper level of the Bollinger Band. Things are starting to get a bit overextended. You can see Amazon. This is a daily chart of Amazon. It's also starting to get overextended to the upside in terms of the Bollinger Bands. So the biggest tech winners are really showing a lot of strength. But when they're showing a lot of strength, that's not when you want to go long. You want to go long at support if they're held for a move to the upside with a stop loss below support. So Amazon, you can see it's showing a lot of strength already, but it's very overextended now. Google obviously is clearly also showing a lot of strength, very overextended as well, but Google and Microsoft are showing strength due to their AI technology now. So it's not, so we have to look at that as something that is going to be sustainable. I don't see Microsoft and Google giving back all of their gains, and I don't see any huge ramifications for the stocks. So that's why Microsoft and Google are most likely going to hold up here, but we have to look at everything else. So Apple, for example, held support, but this by no means is a bullish move, right? This is not like an automatic reason to be extremely bullish. Obviously, we held support, and once again, like if Apple can hold 170, 175, then yeah, by all means, this is going to continue. But what I meant to show you is that Apple is not at a high, right? It's at a support level, and we bounced off of this uptrend. So we bounced off of this uptrend. We touched multiple times throughout the last few months, and we touched again, and it's looking like it's going to just bounce very simply, right? But what I mean to show you is that it's not showing any extreme strength above any level of resistance. So Apple isn't, so it's not really showing like an extreme amount of exuberance in the stock, whereas Microsoft and Google are for their AI, and whereas NVIDIA and AMD is also because of their AI, and also because NVIDIA has earnings soon. So there could also be a run up into earnings, but NVIDIA has been showing, the chips have been showing a lot of strength these past few months. But yeah, all of it is definitely goes together. So my main point is, if we get a gap up on the chips, that is not really going to be very bullish heading in the early hours of trading. I really don't think that it would be much. So in my opinion, it would be much more bullish if we get a gap down. If we got a gap down and we held 411, 412, made everyone bearish, that would be a much better opportunity to go long for a rip to the upside. But yeah, now it's just going to be a matter of fun. Not everything is going to be as easy to understand day to day, but things worked out. We said today was going to be an explosive move, and today was that explosive move. So yeah, moving forward, now we just have to see what happens next. And tomorrow should be pretty fun. Hopefully my internet works and I'll be able to stream. But again, if you guys enjoy the content, if you guys have been watching this entire time, I really appreciate you guys. You guys are the MVPs for watching this long into the video. Because I know, like, I usually just like scroll through videos and everything like that. I don't even really watch towards the end always, but the channels that I do watch, I really like. So the fact that you guys are here, I really appreciate you guys, and it means the world to me. Please make sure to like, comment, and subscribe. I really appreciate all of your love and support. I really appreciate it, honestly, and I'm very happy that I could help. So yeah, with that being said, hope you guys have a spectacular day. I will see you guys bright and early tomorrow morning. Thank you. Have a good one.